There's pressure in the grain market except for one of the wheat categories. We'll talk about that here in just a moment. First, the corn market. We've got the nearby May corn contract down 2 3/4 cents at 3.70 That's only a quarter of a penny away from the low. The July is down 2 1/4, and the new crop December is down 2 cents at 3.94. Again, only a quarter of a penny off of the low. Over in the soybean market, the nearby soybeans for May is down 4 3/4 at 9.04 November soybeans down 4 1/2. It's at 9.38. Then in the wheat market for Chicago, the July is down 3 3/4 at 4.64 In the Kansas City wheat market, July is down 5 1/4 at 4.46 and that's not too far off of the low either, about a penny and a quarter. The July Minneapolis wheat contract, on the other hand, is going the opposite direction. It's up 2 1/4 at 5.59 3/4. Then in the cotton market here today, we've got the May cotton down 35 at 75.15. The December cotton down 23 at 74.29, and that is on the low of the day so far. Let's check in with Todd Horwitz. He's with Bubba Trading, and he joins us live from his office. Good day to you, sir. A little bit of pressure over here in the grains. Looks like that the China news maybe has shifted some of the momentum that we had.
Good morning, John. You know, again, I think this is some natural selling. You know, we had a pretty good finish to last week, and I think that you might expect to see a little bit of a sell-off, you know, early on a Monday or Tuesday. Again, I'm not concerned. I think this is really more buying opportunities. I would venture to say, in my opinion, in the grain markets, pretty much across the board, the lows are now in for this cycle, and I think that we work for higher prices, and I think dips are meant to be bought right now.
Interesting. Let's talk also about the dollar, because we've been watching that relatively closely here. And so far, the dollar here today, what about this performance? Down about 200 points, 96.390. You know, it took a run there at 97 for a while.
Actually, it was over 97, and I think right here is probably some support in the dollar. Again, I'm still convinced that the dollar is going to go to par. I think that some of this stuff may change. You know, you've got a Fed meeting coming out on Wednesday, their announcement, so that is probably having a little bit of pressure on the dollar going into that. But I think the dollar overall is much stronger, and it does show the weak global economy, because that's where money flows into the U.S. dollar. That is one of the safety assets that people use.
Todd, I also want to get your thoughts on crude oil. When we check the crude oil futures over here, and the heating oil as well, April crude oil is up 48 cents a barrel at an even $59, getting close to that 60 level. Then over in the heating oil market, that's a market that has been continuing to retreat just somewhat. We're down a quarter of a penny at $1.96 a gallon. Back on that crude oil topic, though, certainly looks like $60 may be an area to kind of go through. And then what's the next level?
Well, I think 60 is a pretty big level. I thought 58 when we were still in April. Now we're in May crude, so we're a little bit over 59. I think, again, we're seeing a little bit of a short squeeze. You're seeing some talk out of OPEC, but you know that the frackers can support on lower prices, and as these prices start to go higher, they're going to start to add more rigs, they're going to start to add more supply, and we still haven't changed the overall supply-demand picture. We still have way too much supply and not enough demand, and I think this is more of an artificial bounce here. But again, you can't fight it, but I would be very surprised if we get through 60.
All right. Hey, when we come back, Todd, let's talk about the livestock trade. Stay with us. We've got more coming up here on the Market Day Report. As we get started over here in the livestock segment this time around, the livestock trade a little bit mixed here today, and that's for live cattle, feeder cattle, and hogs. First, the live cattle market. April down 60 at 128.50. June up 42 at 122.35. The August live cattle contract is up 25 cents at 117.97. Over in the feeder cattle market, March is up 30 at 141.63. April is down 38 at 146.55. May down 22 at 148.22. And the August is up 15 at 153.70. Hog market also mixed, but this one is a little clearer defined because the nearbys are higher, the deferreds are lower. April lean hogs up $1.28 at 70.08. So we're back, we are up above $70 here. Still a ways from the high of 70.45. May up 50 at 78.40. But then you get out to June, we're down 48 at 86.05. The rest of those contracts weaker. So let's go back and talk with Todd Horwitz with Bubba Trading here. And first of all, what's your thoughts in the livestock market right here, or the way things stand now, Todd?
Well, John, I think we've got prices that are still very strong. I think when you look at the fat cattle, I think, obviously you can come down to, we saw 126 last week, but I think we're going to go higher. I think we're going to continue to make new highs here. Again, it looks really good. There was a little bit of damage last Wednesday when the market fell apart, but I think overall we're looking really solid. When you look at the feeders, if you're looking at April, 141 is a great level to step back in. If you're looking at May, 144 is a great level. I'm looking for higher prices pretty much across the board in everything, including, meats and grains. So I think we're looking for higher prices just for the right spots to step in here.
Todd, what about the market? Is it feeling pretty confident about when we start to warm things up that the grills will come on and folks will really be going to the meat case?
I think so, John. I think, listen, supposedly the economy is very strong and people are feeling good about it. They're getting more money in their weekly checks. So I would expect to see that. You do get some witness of that when you go into some of the restaurants that are, always busy now. So, again, I would expect it to be a very big season for the meats because I think there's a lot of things going on that are positive in the general economy. People are making more money. They're going to spend more, and certainly they're going to go to the protein complex and get that money, get that good meat.
Todd, any expectations about the Fed's meeting this week?
I think it's going to be the usual nothing, John. I think what you've really got is the Fed's going to remain dovish because for some reason they're still tied to the stock market. They're going to try to keep rates low because of what's going on globally. So the only thing that can change that is if they say something that indicates they're going to hike rates. I believe that rates should be going higher, but right now they don't. And they're in charge of that department, unfortunately, but they don't want the free market to work. But I think that there won't be much to come out of this right now. I think it'll be more same old is what it's going to be. And I think traders are looking to see if they're going to actually talk about cutting rates, which would send markets higher.
All right, Todd, thank you very much. Todd, Bubba Horwitz of Bubba Trading, and he is based in Redwood, Illinois, as he joins us from his office there today for analysis of all of this.
All right, thank you so much, Markets Editor John Jenkinson.
Yes, ma'am.